Peter, thanks for joining us. It's good to see you again.
Thanks very much for having me, Jimmy. It's a great pleasure to be here.
Peter, before we do a deep dive on your operations, why don't we just start with a brief overview of Hudbay Minerals?
With pleasure, Jimmy. So we're a diversified copper miner that's focused on low-cost, long-life assets in the Americas. Copper is very much our primary metal, but we also offer investors increasing exposure to gold. In Peru, we have our flagship Constancia mine with a high-grade copper-gold satellite pit called Pampacancha that we started mining at the end of April. In Manitoba, Canada, we have our 777 mine in Flin Flon that's been in operation for over 17 years. And we have the Lalor gold zinc copper mine in Snow Lake, where we're expecting to significantly increase gold production through the completion of the refurbishment of our new Britannia gold mill this year. In the United States, we have Rosemont in Arizona. It's a top-tier copper development asset that was recently stalled by an unprecedented court ruling, and we're currently appealing that decision alongside the United States Department of Justice to overturn it. We've recently made an exciting new exploration discovery on our private land near Rosemont, which we call Copper World, and we believe this has the potential to be a world-class copper asset that is certainly the best discovery that Hudbay has made since the Lalor discovery in 2007. We also have the Mason Copper Project in Nevada, where we've just released a positive PEA that outlines a 27-year mine life and attractive project economics at a $3.10 long-term copper price. And in addition to these properties, we have an extensive portfolio of exploration assets in the Americas that I believe provide us with substantial optionality. But most importantly, I think ore bodies aren't made or aren't much use without the right people. And I truly believe that at Hudbay, we have a disproportionately talented team for a company of our size. So there you have us, Jimmy.
That's a great overview, Peter. And as you mentioned in your intro, your flagship property is Constancia, which is in Peru. It produces approximately 200 million pounds of copper annually. And you just recently started processing ore from a satellite deposit called Pampacancha. And that's really changed the economics of Constancia. Why don't you touch on that and just tell us about how that's improved the economics?
Certainly. So for background, Pampacancha, as you say, is a high-grade copper-gold satellite that's located some 5 kilometers from our Constancia mine and mill. The copper grade at Pampacancha is double the copper grade at Constancia, and the gold grade is nearly 10 times higher. So as you say, we achieved first production in April, which is consistent with our annual guidance. The Pampacancha pit has approximately a 4-year life. During this period, about 1/3 of the production at Constancia will come from Pampacancha, which will bring Constancia's annual copper production to over 200 million pounds. So due to these higher grades, our C1 cash costs are expected to significantly decline over the next several years to below $1 per pound of copper, net of byproduct credits, which compares to around $1.45 per pound last year.
That's huge improvements to go from $1.45 down to $1, so massive margins there.
Yeah, indeed. We're pretty excited about it, and there's more.
So, Peter, as you mentioned, you're going to have ore coming from Pampacancha for 45 years, 4 to 5 years, and then you're going to have to replace that. And I'm assuming you're going to do that through exploration work at Constancia or through regional exploration. Why don't you touch on that?
Certainly. So we've recently announced a larger and higher grade reserve estimate at Constancia, which incorporates the Constancia North pit extension and improves the production profile beyond Pampacancha. This results in an expected average annual copper production from Constancia of some 220 million pounds over the next 8 years at first quartile cash costs. And beyond this, Constancia North remains open to the north, and there remains further exploration potential to convert additional resources to reserves and potentially extend the resources through an underground operation, which of course would be nothing new to us. So beyond what's in the ground, we have a highly skilled and creative team at site that has successfully and continually increased throughput beyond Constancia's nameplate capacity, and I have no doubt that the team will continue to do so. And then there's technology. We'll continue to deploy technology to offset grade decline over time to enhance our longer-term production profile. And then I'd be remiss in not mentioning that Constancia has strong potential to extend mine life through exploration on our prospective satellite land packages. We have every intention of demonstrating that what we do in Peru will mirror our history in Manitoba, where there's not a single mine that we've operated over our 100-year history where we didn't extend reserves materially over time. But perhaps I'm getting ahead of myself, but when you pose the question of what's next, I can't help but point out that our exploration programs at Hudbay are absolutely results oriented. So consider our discovery of the 1901 deposit in 2019 in Manitoba, or our continued expansion of gold zones and resources at Lalor, or more recently our copper well discovery. These discoveries should offer a sense of what I'm talking about, and I expect no less in Peru. I spoke about talented people. Well, we have one of the best exploration teams I've worked with. And these folks truly know how to work with their operations counterparts to generate creative outcomes. So there's a lot of good stuff on the Constancia horizon, I believe.
So you mentioned a few other satellite deposits outside of Constancia. I believe you've identified 5 mineralized deposits, all within trucking distance. Can you just touch on those and just tell us what you're going to do in terms of exploration this year and what your budget might be?
Yeah, so I did get a little bit ahead of myself. Look, I do believe that we have one of the best exploration portfolios in Peru. The tenements we have are located close to Constancia and have the potential to host a world-class copper deposit, possibly much larger than Constancia. We're particularly excited about Maria Reina, which sits on a line that joins Las Bambas and Tintaya, and which has a radiometric footprint that is not dissimilar to these mines in scale. Another reason why we are so excited about Maria Reina is that Vale historically drilled the property and intersected over 500 feet with 1% copper equivalent from surface. So we're in the process of discussing an exploration agreement with the community, and once an agreement is reached, we'll complete the remaining regulatory process required to obtain our drill permits, which is about a 12 to 18-month process. We did recently complete this process at our Coincha North exploration target, and we've started drilling there. Now, I should point out that we have a strong community relations presence in Peru, and our deliberate but patient approach has earned us a strong social license there. This was demonstrated by our recent success at Pampacancha, and we believe that the Pampacancha land acquisition process has provided the opportunity to unlock the potential in these other satellite deposits, as these communities now have an idea of what to expect if we're successful in exploring and finding something economic to exploit. So beyond Constancia, we have the Yagen property in northern Peru, where we expect to commence drilling activities in the coming weeks. Yagen is a copper porphyry target that we optioned from Vale, and it's located near the city of Trujillo at lower altitude and in close proximity to existing infrastructure. So given the prospective land package we have in the country, together with our expertise in community relations and successful exploration, I'm pretty confident we'll be present in Peru for many years beyond the current 17-year mine life.
So Peter, we cannot have a discussion on Peru without discussing the current political situation. And this is something you're very familiar with, given your current position, but also previous jobs in Peru. And I'm curious just to hear your views on the political landscape and what it means for the mining industry overall.
This is a really interesting question, Jimmy. Let's start with a little context. Mining is incredibly important to Peru. About 10% of Peru's GDP comes from mining, and mining accounts for half of Peru's export income and around 1/4 of foreign investment into Peru. This said, I've worked in or been associated with Peru since 1997, and during that time, we've seen a number of administrations. Almost every time there's an election, there's polarization between the left and the right, and there's lots of noise and rhetoric accompanied by a sense of impending doom if the candidate on the left is elected. Yet when in 2011, the far left candidate, Ollanta Humala, was elected, he understood the importance of mining. Yes, he did tinker with the fiscal regime somewhat. However, he offset these changes, and in our case, with accelerated depreciation. So what's different today? The pandemic is the difference, and it certainly has had a significant economic impact on many countries. We've seen pressures to increase mining taxes in several regions, not just Peru, you mentioned Chile, but we've also recently seen higher proposed taxes in Nevada. But I come back to one principle that we follow at Hudbay. We invest in investment-grade countries in the Americas. We don't invest in countries with confiscatory regimes. Peru and Chile account for nearly 40% of global copper supply, and even today, we would rather be in these copper regions than in the other half. At the end of the day, these will continue to be copper countries. And as I mentioned, Hudbay has a strong social license in Peru. Constancia has successfully operated through several administrations, and we expect to work constructively with the new administration and to continue to focus on our operations and our communities. And the bottom line is that we believe Peru will continue to play an important part of Hudbay's future.
That's a great overview of Constancia and also Peru. Thank you for that, Peter. Now let's move on to your Canadian operations, Snow Lake. You're currently undergoing a major refurbishing of the New Britannia gold mill, and that's going to result in significantly higher gold recoveries. So why don't you give us an overview of Manitoba?
Certainly. So for those who are not familiar with our New Britannia mill that you just mentioned and our Snow Lake mining operations in Manitoba, our Snow Lake operations consist of a Lalor underground mine that has been in production since 2014 and has steadily increased and optimized production rates over the past several years. While it was traditionally a base metals deposit feeding our Stawell base metal concentrator, Lalor is transitioning to a primary gold mine as we complete the refurbishment of the New Britannia gold mill in the middle of the year. The New Britannia refurbishment project is over 80% complete, and first gold production from the gold circuit is expected in early Q3. We also are constructing a new copper flotation circuit at New Britannia to maximize copper recoveries from Lalor, and the copper circuit remains on track for commissioning and ramp up in the fourth quarter of this year. Now, we're always looking to continuously optimize our Snow Lake operations. So, for example, we're currently implementing technology to increase recoveries and throughput at Stawell. We've converted additional resources to reserves at Lalor. We have plans in place to expand Lalor to 5,300 tons per day by 2023 from 4,500 tons per day today. And we've incorporated the nearby 1901 deposit into our Snow Lake mine plan. So as a result of executing our Snow Lake gold strategy over the past several years, we've steadily increased the annual gold production from 140,000 ounces to 150,000 ounces, and now to over 180,000 ounces at approximately $400 per ounce C1 cash costs over the next 6 years, as indicated in our recent updated mine plan, which we released at the end of March. But that's not the end of it. We have a history of resource conversion and discovery, and we have every reason to believe that there's substantial upside beyond the current mine plan. We've historically converted 80% of our resources to reserves and have several areas to further expand Snow Lake resources. So we believe we have the potential to increase gold production to over 200,000 ounces per year. I should also point out that Lalor is a VMS deposit, and it has similarities with other mature VMS complexes which have extended mineralization at depth over decades of exploration. Agnico Eagle's LaRonde mine is an example. Lalor is a fairly recent operation and has only been explored down to 1,200 meters depth, which is less than half the vertical extent of LaRonde. So we have every reason to believe that there's much more to come as we continue to explore at depth in Lalor. Separately, over the past few years, we haven't held back on brownfield or in-mine exploration, but because of our growth capital spend, we've been far more reserved in greenfields exploration. We're now resuming some of our greenfield exploration in Manitoba, which, as you can imagine, has the potential to yield some interesting results. So this said, our Snow Lake operations currently have a 17-year mine life, but I'd be surprised if this doesn't become at least a quarter-of-a-century operation.
So we've touched on Peru, we've touched on the Canadian operations. Why don't we move to Arizona, where you have a very active pipeline? I'm sure a lot of our viewers are familiar with Rosemont. It's currently on hold because pending an illegal decision. So maybe you can just give us an update on Rosemont, and you also have a very active exploration program there with Copper World. So let's talk about that also.
Certainly, Jimmy. So for those who don't know, our Rosemont Copper Project is located in Arizona. It's a top-tier copper development asset that was recently, as you said, stalled by an unprecedented court ruling, where we're currently appealing alongside the United States Department of Justice to overturn the judge's decision. We expect an appeal decision in the second half of this year, but we've not stood still in Arizona. So we recently made a very exciting new exploration discovery on our private lands near Rosemont, which we're calling Copper World. And we believe this has the potential to be a world-class copper mine in its own right. There's no doubt that this is the best discovery Hudbay has made since the Lalor discovery back in 2007. But overall, we believe that we have three of the best underdeveloped or undeveloped copper deposits in our portfolio, namely Rosemont, Copper World, and the Mason project in Nevada, which is our longer dated project. These deposits provide the potential to substantially grow our production profile and add meaningful long-term value for shareholders. But we are super excited about Copper World, and we've been very, very encouraged by the drill results that we've seen there to date. It contains higher grades than Rosemont. They're located much closer to surface. For example, one of the drill holes that we drilled intersected 440 feet of copper at 1.38%, including 70 feet at 4.2% of copper. We've identified 4 deposits at Copper World, all located on our private land, which simplifies the permitting process, of course. Now, I visited the area back in April, and honestly, one can see signs of surface mineralization everywhere you look. So I can understand why our exploration team is so excited about Copper World.
And Peter, let's just touch a little bit on how much money you're going to spend on it this year. What's your drilling budget? How many rigs are you going to have going at Copper World?
Sure. Our drilling budget is $24 million for Copper World this year, which increased from the initial $10 million we budgeted at the beginning of the year due to the continued strong results that we've seen from the 2021 drill program thus far. We expect to drill some 150,000 feet this year, which is significantly higher than our 2020 drill program of 40,000 feet. We expect to publish an initial inferred resource estimate before the end of the year, but we're also spending an additional $10 million on various studies to support the completion of a PEA in the first half of 2022. And in that sense, to support all this work, we have 5 drill rigs operating at site right now, which is an increase from the 3 that we had at the start of the initial 2020 drill program.
And I'm sorry, Peter, how far is this from Rosemont?
Approximately 6 kilometers, Jimmy.
And I know it's still early days, but do you see this as being a standalone project?
Copper World certainly could be a standalone project, or it could be developed in conjunction with Rosemont. And the timelines to production are likely pretty similar in the 2 scenarios. So depending on the results from the exploration and the PEA work that we do, we could have a PFS completed by the end of next year and a definitive feasibility study completed in 2023. So it's likely a 3-year build. So production by 2027 is not unreasonable to consider.
And so you have a lot going on in your pipeline. You have Rosemont, you have Copper World, you also have Mason. Do you think the market's giving you any value for these assets?
Jimmy, I believe that there's very little, if any, value in our share price for Rosemont, let alone for our other United States assets at Copper World and Mason. I mean, Copper World has its name for a reason. And Mason has a 2.2 billion ton resource that our recent PEA indicated drives an NPV of over $500 million at a long-term copper price of $3.10. And so I'm sure you get a sense that our use of $3.10 for long-term pricing should tell you that we're conservative when it comes to project evaluation, and we're not given to hyperbole. So I really do believe that our share price does not reflect the value of these assets.
And Peter, I'm glad you brought up Mason, because that was acquired. That was one company that you had made an investment in, and then you eventually took it over. But one of the things I've always admired about Hudbay Minerals was its toehold strategy, whereby it would make small investments in various junior exploracos. This is how you acquired Constancia and also Rosemont. And is this a strategy you intend on pursuing?
Yeah, Jimmy, our Toehold strategy has been an effective way to have exploration exposure in many different early stage assets, while committing minimal amounts of capital in the form of small equity stakes. We also typically offer our exploration expertise to the junior company. For example, we can help with geological or geophysical interpretation to identify and prioritize exploration drill targets. So the strategy has proven successful for us and gave us toeholds, as you say, in Constancia and at Rosemont and at Mason before we fully acquired these assets. But we have been a little bit less active in recent years as there were limited junior opportunities, and we were more focused on exploring our own land package. We look at our capital allocation opportunities holistically, and toehold investments are evaluated together with in-house exploration opportunities. And given our recent exploration successes, we recently focused more on organic exploration. But that said, the Toehold strategy has historically paid off for Hudbay, and we certainly will continue to look for the right toehold opportunities.
And I'm just curious, what investment criteria do you look for before you make an investment in one of these junior explorcos?
Yeah, as I mentioned, we look at these in conjunction with our exploration portfolio. So all of our toehold investments go through the same screening process as any capital allocation opportunity. The assets need to have characteristics that meet our overall strategic criteria, including being located in mining-friendly jurisdictions in the Americas, copper-focused, and have the potential to ultimately leverage our proven core competencies of exploration, mine development, and efficient operations to drive value.
Peter, just one more question before we wrap it up, but I want to get your views on consolidation and also M&A. We've seen a little bit of M&A activity in the precious metal space, not a whole lot, but we've seen very little in the base metals. And maybe the last large deal we saw was with Nevsun, your former company. But what are your thoughts on this? Are you surprised we're not seeing more activity?
To me, I'm not really surprised. There really is a scarcity of complementary base metals assets. So you've got the bigger guys, you've got the smaller guys, but you really have a scarcity of companies or assets that you can combine to create not only scale, but also synergies and growth of value. So no, I am not surprised at all, and I still scratch my head a little bit as I try to figure out where the next combination will come from. But that said, we are always looking for opportunities, and we need to be creative to determine how we can, in fact, create scale in the industry, drive shareholder value through combination or through acquisition. But there's not a lot out there.
Peter, as we wrap up, why don't you just tell us what we can expect in terms of news flow in the coming weeks and months?
Certainly. Look, there are lots of exciting near-term catalysts at Hudbay. So in Peru, we expect to receive results from our Coincha North drilling program in the coming months. We'll begin drilling the Yagin property in the second quarter. We expect to be advancing the exploration permitting process at the other regional Constancia properties this year once we reach a community exploration agreement. And we intend to complete a trade-off study for the Constancia North underground operation before the end of the year. In the medium term, we expect to advance our work on examining further areas of optimization at Constancia, including the use of ore sorting technology and copper recovery improvements at the mill. Then in Manitoba, we expect to complete commissioning of the New Britannia gold mill in the coming months, and we expect to pour first gold early in the third quarter. We then expect to commission and ramp up the New Britannia copper circuit in the fourth quarter. We've started the work in preparation for the ramp up at Lalor to 5,300 tons per day, and the Stall Mill recovery improvement program has been kicked off. We'll also continue this year's exploration program in the Snow Lake region. Then in Arizona, we look forward to releasing further exploration drilling results to potentially extend the mineralization at Copper World, to publish an initial resource estimate before the end of the year, and work towards a PEA to be released in the first half of next year. We also expect to receive a decision from the Ninth Circuit Court of Appeals on Rosemont in the second half of the year. And at Mason, we'll continue to advance early exploration work in preparation for a future drilling program. Finally, we've been very, very focused on delivery over the past couple of years, and we're now on the cusp of seeing our deliberate and thoughtful investments paying off through very significant increases in cash flows. And 5 to 6 years from now, we expect to enjoy a significant chunk of copper production coming from our United States business. So I believe we are very well positioned for the strong copper market ahead of us. And I feel that the future is extremely promising for us at Hudbay.
Well, you and your team are going to be quite busy in the coming months.
Indeed, we are.
Well, Peter, that was a great overview of the Hudbay Minerals story. I want to thank you for sharing it with us. And to all the viewers, if you have any questions or questions that were not answered during this discussion, please send us an email to info@bloorstreetcapital.com, and I'll make sure a member of Peter's team reaches out to you. And if you would like some research on Hudbay Minerals, please send us an email and we'll send that along. Once again, Peter, I want to thank you.
Thank you so much, Jimmy, and thank you everybody else for listening in. It's been a great pleasure to be here today.